SOFI's Q2 2025 earnings are just around the corner, and it is that time of the quarter where we are discussing our expectations for the upcoming earnings. Now, in this quarter, we are also going to be doing something different because I've heard comments on X and FinTweet in general that this could potentially be a quarter where SOFI is growing 40% year over year, and we're going to assess what it is going to take in order for them to achieve this 40% year over year growth number. On top of that, we're also looking for any fundamental changes within SOFI's business that could potentially shift its valuation. But as always, potential is a dangerous word, so let's dive in. So each time we actually approach an earnings expectations video, I try to give a slightly different spin to things so that we can add some value to the discussion beyond just listing out my earnings expectations, which is why I'm also going to be showing you what exactly it takes for SOFI's business to achieve a 40% year over year growth and what that could mean for its price action after Q2 2025 earnings. Now, in the first part of this video, I'm not going to keep you waiting. I'm going to be giving you my earnings expectations straight away. And if you have followed my channel for some time, this will definitely make sense to you because you know my thought process and how I think about their earnings every single quarter. However, for those of you who are perhaps new to this channel, what we do is that we start by using the fundamental metrics of SOFI's business, things like member growth as well as the number of products each member uses, and from there we are able to then infer a revenue number as well as SOFI's profitability, right? So we don't just slap on the growth percentage as our assumptions based on historical performance of growth and say that, this is a conservative number if you look at the historical values. And to me, this method of valuation actually helps us to better understand the health of SOFI's business and to understand what are their key growth drivers, and which is why I want to start talking about member growth, which is one of SOFI's main growth drivers. Now, when it comes to member growth, I don't actually see any drastic changes in this upcoming quarter. I think marketing in general for SOFI is an ongoing process. It is not any one thing in particular that is going to cause a spike in members, and I think they have already put into place a lot of different moving pieces to build out a strong marketing ecosystem and marketing strategy overall. So in the most recent quarter, you can see the conclusion of the NBA Finals as well as the CMA Music Fest. All of these are part of SOFI's marketing strategy to drive brand awareness. And I know a couple of people, including Tanner, who actually pointed out that during the quarter, website traffic for SOFI spiked. I believe this happened sometime in the back half of May going into June. However, apart from this, I don't think that there are any clear indications that this will be a particularly massive quarter for SOFI in terms of member additions. I think they'll be growing more or less in line with what they have done previously, which is why on a quarter-over-quarter basis, I expect net new members to come in at around 824,000 net new members, and this actually translates to a 7.5% quarter-over-quarter growth or a 33.8% year-over-year growth. And so all of these members within SOFI's ecosystem will be using SOFI products, and what we're going to be doing is to measure the products per member and use that to tell us the total number of products. Now, there have been no drastic changes in terms of their product lineup in the second quarter of 2025, and I think on top of this, we are only expecting greater cross-sell going into this back half of 2025, especially with things like crypto coming back into their ecosystem, with the changes around the federal student loans as well as rate cuts just around the corner. I think that is when we're going to see a greater level of cross-sell in SOFI's business. So therefore, in the upcoming quarter, Q2 2025, we are still expecting a products per member number somewhere in the mid 1.4 range. For me, I'm keeping it consistent, 1.46 products per member, and this is going to put the total number of products in Q2 2025 at 17.14 million, which is a 34.1% year-over-year growth. And all of these products within SOFI's ecosystem is going to generate revenue for the company. And if we're going to break this down into segment level, the revenue per lending product has been hovering in the $190 to $200 of revenue per product range over the last year. And if you take a look at the trend, actually what you're going to notice is that this was actually slow in the first half of the year before ramping up in the back half of 2024. And so I expect this to be the trend in 2025 as well, and therefore lending revenue per product I expect to come in at around $192, and this puts Q2 2025 lending revenue at $434 million, which represents a 28% year-over-year growth. Now, their financial services revenue, which is going to be driven primarily by their loan platform business, should come in at around $22 per product of revenue per product, which is more or less in line with what we have seen over the last couple of quarters. And if you multiply this this number by the total number of financial services products, around 14 million financial services products, then the financial services revenue should come in at $327 million, and this would represent an 86% year-over-year growth. Now, thereafter, if you go into SOFI's third segment, which is their tech platform, I've mentioned this previously in one of my videos where I spoke about the effects of Chime leaving SOFI's tech platform and tech ecosystem, that one of the things I noticed is that after Chime left SOFI's platform, the amount of tech platform revenue generated per account actually went up from 60 cents to 65 cents. Now, I didn't think about this when I first made the video on SOFI's Fireside Chat where Anthony Noto was actually speaking about the tech platform. And one of the main points he actually made during that video is that, when it comes to cost, SOFI may lose out to some of their competitors. So when they are serving customers who are slightly more cost conscious, then they tend to lose out to their other competitors. However, when it comes to functionality and scalability, SOFI, at least he claims, are top in class. And what we are seeing in terms of the revenue per tech platform account after Chime leaving SOFI's platform seems to support that narrative, because without these 16 million accounts, SOFI is actually generating a greater amount of revenue per account, which means that Chime could potentially be one of those customers who might have been slightly more cost conscious and bringing down the overall revenue per account. But this is just my inference based on the facts that we have, and I'm not saying that this is definitely the case because Chime hasn't come out and say that this was a cost consideration. However, with that being said, I also presume that as they go back to growth in terms of the number of Galileo accounts, we will see this revenue per tech platform account start to dip back down to the low 60 cents range. And so basically going into Q2 of 2025, I'm expecting this number to come in at 62 cents of tech platform revenue per account. This is not going to be as high as the 65 cents that we saw in the first quarter, but definitely higher than where they have been previously. And this brings the tech platform revenue up to around $102.6 million. Now, this represents a 7.6% year-over-year growth. And personally, for me, I'm actually expecting pretty nominal growth in the tech platform, even for the rest of 2025, because I think management has already told us that, yes, they have a couple of deals in the pipeline, and many of these deals, even if they are signed in the first half of 2025, the revenue recognition is only going to be felt in 2026. Now, in terms of corporate revenue, I don't do much in terms of expectations over here. I'm just using my Excel formula, finding the average over the last couple of quarters, and from there you get around negative $37 million. And so at the end of the day, if you put all these numbers together, this gives you an adjusted net revenue of $827 million, and this represents a 38.6% year-over-year growth. Now, therefore, if you take a look at this number, you can actually tell it is pretty close to the 40% year-over-year growth number that people are talking about, that you can actually see the community around SOFI getting excited about. And later on in this video, we are going to go back to some of the assumptions we have made and to decide which numbers might be perhaps a little bit too conservative, and see what needs to happen in order for SOFI to reach a 40% year-over-year growth. However, right now, I really want to turn our attention to the profitability of the business, and I expect contribution profit in the lending segment to stay more or less in line with historical values, coming in close to 60%. In fact, this number has been in the 58% range over the last couple of quarters, and I expect contribution margins for lending to come in around the same level at 58% this quarter, and this puts contribution profit for lending at $251.9 million. Now, when it comes to the financial services aspect of their business, I expect contribution margins to continue to expand. Management has already told us that the contribution margins for financial services should expand north of 50%, and I expect this to be the quarter where we see that for the first time. Now, in Q1 of 2025, we have already seen that they are able to create some sort of pricing tension in terms of their loan platform business, and I think this will continue to help them to expand margins. On top of this, they're also expanding the other aspects of their financial services business through credit cards and SOFI Invest, and I believe both of these segments of their business will definitely help to drive better margins, especially for credit cards as they tighten their underwriting process and continue to lower their default rates, which is why I expect contribution margins for their financial services aspect of their business to come in at 52% and a contribution profit of $170.2 million. And finally, the tech platform, which has been the easiest to project out its contribution margin because this has been a fairly linear business, and we expect contribution margins for the tech platform to come in at 31%, which has been the case over the last couple of quarters, and I don't see any reason for any deviation. And this puts contribution profit for the tech platform at $31.8 million. And apart from contribution margins, we know that SOFI likes to operate their business by measuring their incremental margins to project out future profitability. And all along, they have guided for a 30% incremental EBITDA margins as well as 20% incremental net income margins. However, if you look at the historical performance, apart from a few quarters where they are intentionally holding back on profitability based on certain reasons during that quarter, you can always see that they have far exceeded this number. So therefore, in Q2 of 2025, we expect incremental EBITDA margins to increase from 35% to 38%, and that should generate SOFI an adjusted EBITDA of around $225.4 million. And in terms of incremental net income margin, we expect this number to come in around 28%, up from the 22 to 23% that we saw in Q1 of 2025. And this should translate to net income of around $81.8 million, which works out to be an earnings per share of around 7 cents. Now, once we get all these numbers, we are able to then check the reasonableness of these numbers, and this is where we can actually do our adjustments to our assumptions. Because as investors, you don't just adjust the numbers of the company's business just because you want your company to hit some magical number in terms of growth rates to fit your narrative. There needs to be some rationale behind your decision. And therefore, I'm going to show you why exactly it's not unreasonable to expect SOFI to be growing at 40% year over year. Now, based on our assumptions so far, SOFI's revenue should come in at around $827 million, and the high end of their revenue guidance is $805 million. Now, this would represent only a 2.8% beat in terms of their revenue, which would be their lowest beat in over a year. Now, and this is in a year where they are telling us that they have so many tailwinds. I don't think it is out of the realm of possibility to say that they are going to perhaps beat their revenue expectations by more than 2.8%. Because what I've done over here is to actually take the average revenue beat over the last 8 quarters and found that on average they have beaten their revenue, the high end of their revenue guidance, by around 4.8%. Now, the interesting thing here is that for them to achieve a 40% year over year growth, they just have to beat their revenue guidance by 3.9%. Even lower than the average. And if they do that, Q2 2025 revenue should come in at $836.4 million versus the $827 million we projected earlier on. Now, and in a moment, I'm going to show you why is it so easy for them to make up this extra $9 million. But first, let's continue checking the reasonableness of our adjusted EBITDA as well as our net income. Now, with SOFI's adjusted EBITDA projected to come in at around $225 million, this would represent a 7.3% beat over the high end of their guidance, and this beat of 7.3% would be actually on the low side in terms of beating their own expectations over the last couple of quarters. Now, personally for me, I wouldn't be too concerned or surprised by this number coming in on the low side, especially because SOFI has told us that in 2025, their main focus is to reinvest back into the business in order to drive long-term revenue growth. Now, with this framework in mind, we also consider the projection of SOFI's net income to come in at around $81.8 million or an earnings per share of around 7 cents. This would represent a beat of their high-end net income guidance of around 16.9%, let's call it 17%, and this would actually still be the lowest beat of net income since they turned net income positive. Now, all of this, if I put all of this together, it tells me that our assumptions for their incremental margins is more or less in line with expectations, perhaps even on the slightly conservative side, which means that there is a distinct possibility that their earnings per share could come in even at 8 cents in Q2 of 2025. So we have established that it is actually reasonable to expect SOFI to be growing at a 40% year-over-year growth in terms of revenue. And the next question really is what exactly it would take for SOFI to get there. Now, SOFI has 3 levers to pull to drive revenue growth. The first being its member count, the second being product adoption, and finally monetization. Now, I've already mentioned this previously that I don't think the member growth numbers this quarter will be too far out of trend. So I don't think, I feel comfortable adjusting this number. Now, in terms of a higher level of product adoptions, many of the catalysts around the ability of SOFI to cross-sell their existing members will only kick in the second half of 2025, which is why I also feel it is hard for me to assume a higher product per member number than 1.46. But what I do feel comfortable adjusting is SOFI's level of monetization. Now, the revenue per lending products can still come in at $192. However, in terms of the financial services revenue per product, I actually kept this flat quarter over quarter at $22 because I think we tend to see a bigger spike when there are big loan platform deals announced. Now, otherwise, I think this is a fairly consistent revenue stream, but just increasing this number from $22 per product to $22.60 per product, this will bring up SOFI's revenue from $827 million to $836.1 million, and this represents a 40.1% year-over-year growth. Now, with the change of the revenue numbers, this actually affects the incremental margin numbers as well, and with the incremental EBITDA margins staying at 38%, the new adjusted EBITDA should come in at $228 million versus the initial projection of $225 million, and this represents a 8.9% beat on the high end of their guidance, which is still on the low side. And if you consider their net income number with a 28% incremental net income margin, net income would come in at $84.4 million versus the initial projections of $81.8 million, and this translates to a 20.5% beat on net income, which will be the second lowest beat on their net income guidance, with the lowest being 19.7% just back in Q4 of 2024, less than a 1% difference over there. And with all that being said, even if SOFI's net income does come in at $84.4 million, it should still translate to an earnings per share of around 7 cents, and this would put SOFI's trailing 12 months EPS at 23 cents. And that means they are definitely on track to beat their own EPS guidance in 2025, which currently stands at 27 to 28 cents for the full year of 2025. Now, if they end up with an EPS of 30 cents in 2025, that would represent 100% year-over-year growth. That is actually my own expectations for the company. And currently, SOFI is trading at around an 89 times PE, and that puts their PEG at around 0.89 times PEG, which is still slightly undervalued. Now, if you consider companies like Robinhood currently trading at over a 2 times PEG, I don't think it's out of the realm of possibility for SOFI to be trading at a 1.2 times PEG if the market conditions hold up, and this would put SOFI's price at $27.60. Now, I believe the market is able to justify this slight premium that I think SOFI deserves if SOFI does put up this 40% year-over-year growth number, as well as coming in with an EPS between 7 to 8 cents. With that being said, I am expecting a weaker August and September, so I'm not sure whether the price levels will be able to hold after earnings. But for a more in-depth discussion around SOFI's valuation, I will see you after their earnings. But just a reminder that after the SOFI valuation video, I will be diving into my 10 companies in 10 days, and I'll see you in the next one.